Hi, so today I'm gonna be telling you about what life insurance death benefits are. So, firstly, more than half of Americans have life insurance, and the primary advantage of having life insurance is that you can provide a death benefit to anyone you name as a beneficiary. What is a life insurance death benefit? A death benefit is the amount your life insurance policy will pay to your beneficiaries if you pass away, as long as your policy is in force. Who gets the death benefit? Life insurance beneficiaries are the people or organizations you have chosen to receive the death benefits from your life insurance policy. A beneficiary could be people such as a spouse or your adult children, charities, a trust, a business. You can choose multiple beneficiaries for your life insurance policy and you can select how much of the death benefits goes to each. For instance, a business, an individual, and a charity could all be named as beneficiaries on the same policy. You can designate the percent of that benefit to each beneficiary, such as 80% to a spouse and 20% to a brother. A policyholder can remove or add beneficiaries at any time. How beneficiaries can use a death benefit. Beneficiaries can use money from death benefits however they choose. Beneficiaries often use this money for everyday bills like grocery and utilities, for larger debts like a mortgage, or to put a child through college. How do life insurance death benefits work? A death benefit is typically paid in a lump sum to beneficiaries, but there are other options. Death benefit payout options. There are several ways to receive a life insurance payout. Here are the usual death benefit payout options. Lump sum payout. This type of death benefit is paid out all at once rather than over a period of time. It is generally not counted as taxable income. Retainable assets account. Beneficiaries might have the options to leave the death benefits with the insurance company in an interest-bearing amount. You typically get a checkbook to access the cash in the account. Any interest earned will be taxable. Life income payout. You may be able to receive the death benefit in guaranteed payments for the rest of your life. The amount you receive in each payment will be based on your age when you file your life insurance claim. Life income with period certain. This option allows you to receive payments for a certain period and for your beneficiaries to receive the remaining payments if you die before the period is up. Specific income payout. This type of death benefit is paid out in installment over time, such as 10% annually for 10 years. The portion for the benefit that has not been paid out generally earns interest for the beneficiary. Any interest earned over the period will be taxable. Death benefits with different types of life insurance. Here is how the death benefit works with terms life versus permanent life is insurance. Term life insurance. Term life insurance policies lock in level premiums for a set period such as 10, 20, or 30 years. If you pass away with your term life policy is in force, your beneficiaries receive the payout. No death benefit will be paid if your policy expires and you are still living. Permanent life insurance. Permanent life insurance is designed in a way to stay in force for your entire life. If you pass away at any time, your beneficiaries will receive a death benefit as long as your policy has not lapsed due to lack of payment. There are certain circumstances in which a death benefit may be lower than the policy's face value. For example, if you have life insurance with with a cash value account and take out a loan without paying it back, the account will be subtracted from the death benefit if you pass away. Cash value accounts are savings or investment accounts that come with certain types of whole life insurance and accumulate value typically if you don't use the money in your cash value account before you pass away. The cash value reverts back to the life insurance company if you pass away.